Welcome to Prebell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst. I'm part of MarketSmith India team, which manages model portfolio. The disclaimer for this podcast is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Let's look into Nifty's daily chart to understand the market placement at the current moment. For the last 2 to 3 weeks or more, Nifty has been hovering around its 21 DMA. So going forward, this 21 DMA is going to be a very crucial level, and 50 DMA is also not very far from here. So on the downside 50 DMA, we might expect some bounce back from that level. It might act as a good support, which was given in the previously also. 50 DMA and 100 DMAs are some of the strong supports for the Nifty index. So TDMA is going to be a very crucial level going forward for this week and coming week. If that level is breached, we might see further selling happening in the markets. On the upside, we have 600 points to go to declare to make a new high. Until then, we might see consolidation or market moving sideways with a slight volatility. Coming to O'Neill's methodology, we are in uptrend under pressure with a distribution day count of 4. Last week, we have seen 2 distribution days expiring and 1 distribution day getting added. Overall, on net basis, we are at a count of 4. Distribution day is when index declines 0.2% or more on a higher volume. Distribution day is very crucial whenever market is in uptrend or under pressure. It is very important to track weakness in the market, and the distribution days help us to track weakness. Coming to yesterday's session, the fall was more than 0.2%, but the volume was slightly lower than the previous session, so we had not considered it as a distribution day. And if there is any accumulation of distribution days from here, 1 or 2 distribution days and Nifty breaching 50 DMA, we might change the market status to downtrend. In such a scenario, we won't be doing any fresh additions to portfolio. We try to exit most of the stocks from and staying in cash. Earnings season is continuing, and some of the companies which come up with the earnings yesterday are Coal India. The revenue for the December quarter was up 2.8% to 36,000 crores of rupees. Profit on the other side has increased more than 17% to 9,000 crores of rupees. So this is majorly because of improved margins on the operating front. And JSW Energy, the subsidiary JSW Neo Energy, has received a letter of award for a wind capacity of 500 megawatt from Solar Energy Corporation of India. Steel Authority of India has also come up with their results. Revenue has fallen nearly 7% to 23,000 crores. Profit on the other side declined more than 22% to 423 crores of rupees. Coming to today's results, some of the major companies which will be reporting are Eicher Motors, Gujarat Gas, Bharat Heavy Electricals, Z Entertainment, IRCTC, NBCC, Oil India, Hindalco, and Siemens are some of the major companies. Apart from this, there are lots more of companies coming up with their results. So if you have any of these stocks in your portfolio, please be watchful. We might see volatile action in these stocks. Coming to institutional activity, yesterday both foreign institutional investors and domestic institutional investors surprisingly were net buyers, even though the market was down. Domestic investors have bought more than 700 crores of rupees of Indian equities. Foreign institutional investors on net basis bought more than 126 crores of Indian equities. Coming to the global update, US market closed mixed. You can see Dow Jones closed with a gain of 0.3%, whereas the S&P closed flat. Nasdaq declined 0.3%. Coming to Asian markets, as we speak, Nikkei and Kospi are trading with very good gains. Nikkei especially with a gain of 2.3%. Kospi is trading more than 1% higher. Shanghai Composite remains closed for today as well. GIFT Nifty is indicating a positive opening for the index, around 100-point higher opening we might expect. Going by the Asian market trend, we might see Nifty also trading in a positive territory, and Nifty is currently trading slightly below its 21 DMA. So if the today's action is positive, we will see Nifty reclaiming 21 DMA, and staying above 21 DMA is crucial for the investors. For the chart of the day, we picked Ford's Motors. The stock has been trading in a stage 2 long cup base pattern. The base pattern is looking very ideal. You can see, and when the right side of the base formation, that is when the stock is coming to near its pivot, the volume has increased, and most of the bars we see here are blue bars, indicating a strong accumulation happening in the stock. RS line has also moved higher. RS rating is at 87, indicating strong outperformance. ABD rating is also very strong at A+. EPS rating is also very good at 77. That indicate very strong numbers in terms of sales and EPS. Coming to the number of funds section, we are seeing very good improvement in the number of funds section as well. Consistently for the last 4 quarters, the company has attracted new funds, a positive step. So overall, on ratings wise and the chart wise, it is looking very good, and it is still 5% to the pivot. And if you are looking for any fresh additions, you can keep this stock under radar. And if it comes to the buy range on above average volumes, definitely a very good contender for adding to portfolio. Thanks for joining today's pre-bill. Have a good trading session.